and welcome back to my channel. In this video, I would like to point out that the FOMC meeting by the Fed, as indicated on the economic calendar on my shorts that I posted yesterday, is coming up on Wednesday of next week. And this will likely bring the interest rate cut that everyone has been expecting. But I would like to caution everyone that this will likely lead to a market sell-off that has been brewing for the past few months, and that it will likely lead to a bigger bear market down the road. So let's discuss this in further detail. So I'm looking at the bear ETF for the semiconductor sector, since this has been driving the market price actions since the end of 2022. So there is a strong buy signal on the bear side for this sector. And if we look into the QQQ, which is corresponding with the SQQQ, we're seeing the same thing. However, the SQQQ still needs some time to find a bottom here. So the market will likely peak on Tuesday and will start lowering from there. And for this potential market sell off, I am actually seeing this as a trigger for a bigger event, potentially a bear market. Because if we go to the inverse ETF for the SPY, we can see that on the quarter chart, there is this strong buy signal on this inverse ETF for the SPY in 2007. However, there was no buy signal in 2007 on the half-year chart. But there is a buy signal on this same ETF for this potential sell-off that's coming, as well as the annual chart for this potential sell-off. So this potential sell-off that we're walking into is much bigger than 2007. At the very least, I can't see into the more historical bear markets, because this is just the limitation of this software. And to say that this kind of market sell-off is due to a mere rate cut or even a bad jobs market would be an overstatement, because a bad jobs market has been in existence in history, and this kind of market sell-off signal has never existed per this software. So I am considering the possibility of a US debt default, according to my research, and the fact that the credit rating of the US has been downgraded earlier on this year. So this is a real possibility, and I'm planning to do a dedicated video on the US debt levels and what it means on the market. And this is why I said in the beginning, the rate cut is only a trigger, and what is to come is much bigger than this rate cut. And for the past few months, since April, we have been seeing this bounce market, if you will, and we are seeing the strong buy signal here on the QQQ. So this signal is accurate and it means what it says. So I would just like to put this out there for anyone who would like to reference. And for anyone who are still doubting, I would like to bring your attention to the institutional holdings on the QQQ. As of close on Friday, it's at 65 here. If I put it here. And if we just go back to the tariff drop, just before this tariff drop, the institutional holdings was at 62. So we're pretty darn close to that level. And you can see that as the stock prices rise, the institutional holdings have been dropping. So that is your evidence that institutions have been selling as they prop up the asset values. And the buy signal on the bear side are evident on all the Magnificent Seven companies except for Apple, because Apple's only having this buy signal on the bear side up to the week level versus, let's say, Google has it up to the year. And then if you drill down to half year, and then the quarter, and then the month. And if we look at Amazon, same thing. The month, the quarter, half year, and then full year. And Nvidia, same thing. The year, half year, quarter, and the month. And this is a strong buy signal on the month. And what else? Microsoft. So this is your month chart, the quarter, the half year, and the full year. And notice on these charts, these companies have never had this kind of signal on the bear side except for now. So that tells you something big is going to happen in 2025. And Tesla just had its bear buy signals show up, and it's going to need a few days for this to play out because Tesla has not hit all-time highs in the past few weeks. So it's going to need a couple more days for this to play out. But yeah, it's having this buy signal on the bear side as well now. So looking at all of the sectors and stocks, it looks as if the semiconductor sector is going to drop first because Nvidia and AMD have all been forming a top and now are dropping into a lower point off the top now. But Tesla, as we have discussed, is going to form a top, and that's going to need a couple more days. But once Tesla hits the top that's about to form here, the QQQ is going to drop because the bear side on Google has been waiting for Tesla to catch up, and Tesla has only caught up in the last couple days. So once Tesla catches up, then the sell-off is going to happen. I would just like to put this out there, and hopefully this gives you some guidance on what's to come.